morning.
There he is. There he is. Nic Chahine, how you doing?
Doing great. How about you?
Well, not too bad. We're just looking to talk about some stuff besides Apple.
No, I didn't mean it that way. I was telling that if you're sick and tired of the CNBC dribble, basically, does Apple this, Apple that, Apple this, and nothing else, you guys are covering everything.
What do you
Give
think,
us
though?
1 minute thoughts on Apple. We got 60 seconds. We'll put you on the clock.
No problem. I can talk Apple the whole time. I really don't care.
60 seconds, you got. You're already down to 55.
Go. Well, I think that the market is expecting the flying car there, and they'll be disappointed unless they see something clearly changing the game. And you mentioned the iWatch tie-in to healthcare, and that got me excited. I think it was a couple of months ago somebody mentioned it, because it can actually change the game for healthcare, which has been kind of like nowhere on anybody's radar. So I have a friend of mine at the gym who wears something on his shoe from his company, and it gives him a discount for healthcare because he wears that some sort of a pedometer or something like that to see the activity level. So something like that could actually get people excited enough and be the proverbial flying car that I keep using. But if they just come out with a regurgitation of whatever they have with only a slicker looking, or a new feature here, a new feature there, I think they're going to be disappointed.
Okay, I lied. I'm going to give you more than 60 seconds because I got to know what the open interest is looking like on Apple too. What are your thoughts here from an open interest perspective?
The open interest has not budged a lot, and it looks a little bearish, which is pretty strange because the markets in general, the indices, are making room for a run-up, like in the SPY and the Qs. Not the Qs, the IWM even. They're expecting a run-up, but the Apple open interest that I'm looking at, it is looking like they're drawing some sort of a support at 95, and the resistance starts at 99. So anything above 99 is resistive, and the strongest support, although it starts at 98, is 95. And it looks like there's a big wall at 107. So it looks like it's the last line of, oh crap, they ran it up. 107 is where it is actually the high open interest around this price.
Nic, I mean, if you get this kind of consolidation here, I mean, the logical thing to do if you didn't want to, pick a direction would either be like, let's say, a 99 straddle or go with the strangle. Are the premiums just too high to be able to make money on that kind of strategy?
It's not that it's too high. I prefer to not play the event with a big position, and I prefer to play just after the event with a big position. It's kind of like somebody giving you a peek at the lotto numbers, and then you play the money afterwards and pick your number. Yes, you can make money if you sell a strangle of sorts, and it actually comes out in between the range where the stock fluctuates because the volatility crushes the premiums right after. But so the idea, you sell it at the high premium, and then the premium gets crushed, and you buy it back for about half or less, and you keep the difference. But if you get it wrong, you're in the money short some strikes, and that's not pretty cool. So yes, you can do it, but I'd rather not to do it. But you mentioned also, Joel, I think you said, how do you play a stalemate, which is kind of the same theoretical question you're asking here. Because you said we've spent so many days right around here, and this stalemate is played via iron condor. So you sell spreads above and below the stalemate with some buffers, and then you just watch time tick by, and then the premium deteriorates, and then you buy them back cheaper, and you keep repeating until things change. So that's how you monetize a stalemate, via iron condors. If you need to know more about it in details, we can either have a special day about it, or you can message me.
Dennis, are you playing any straddles on Apple?
No, I haven't lately. Last time I got the beats, I actually was selling the straddle, and I didn't do it the Nic Chahine way. I left myself open-ended on the one end, and we know what happened. The 7-for-1 split, and I was crawling under my desk looking for cover, and I couldn't find any. So it was an ugly morning there for me.
I think that's...
You trade, you learn, you live, you learn, and I learned that I shouldn't leave ahead of an earnings report. I should have an Apple open-ended straddle.
Here's my Apple thing. If you can pull up, I don't know, I'm not looking at your show because it gets feedback. I have the
what do you need?
Chat in front of me. So if you pull up an Apple 1 year daily, and you can look from June somewhere June 10th on, you can clearly see a channel up going for Apple, right? And current price is almost right in the middle of it with a red candle after that big drop. So if you're there, then you can see that I mentioned 95 is where the defense is at, and if you extend the bottom end of the trend, it hits 95-ish, and
Right.
then the upper end is about 102 and a half, maybe 103. So here's the thing: if it breaks apart 295, I think you can expect more downside on a very big disappointment. It's a highly unlikely, but it is possible. And then if it does rally, which is the more likely because people want to rally it psychologically, and it does hit the 103 or the 102, is going to break out from it, and then that 107 will come into play as the bear is saying, no, you're not going through 107 this week.
Okay, so we got a stalemate in Apple here, and then we also have a stalemate in the market. And I talked a little bit ago about just the multiple closes here, right around this 2,000 level. And I'm talking the futures here. I know people like to pay attention to the cash, but I'm all over the futures here.
Cash is almost the same as the futures right now.
Yeah,
Anyway,
because we're
on
coming into
September
expiration.
expiration.
Correct.
Yeah.
I mean, that's another thing I want to talk to you about, Nick. I mean, we do have a quad witch coming up later this month. I mean, how you playing it here? I know you said, you don't mind selling like the 2030s and 2040s because, you don't see the catalyst to take us up to that level, so you're selling that far out. Are you doing the same thing on the downside? Are you selling the 1960 puts and the 1950 puts?
No, I have not. I'm waiting to do it on the first sign of my credit call spreads that you mentioned are getting in trouble, but they haven't been. So I am not doing that. Last week on Friday for the day, I did it just for the day, just for fun, and it wasn't very fun. So I thought, I still don't want to fight the battle at the lines. I'm still doing the same thing. I can still play the range. I'm just using further time out, so I don't have to watch the ticker and sweat the small stuff. You mentioned 2030s. I did 2075. So I went
All
out to
day
October.
long, man. I'll be selling those all day long.
Yeah, that's what I'm doing. I mean, why bother? Fight
What if
the.
the flying car comes out from Apple? Won't that drive the entire market up to that level?
Yeah, they want to run, but they want to run, but I'll see it coming. I mean, I'll see it coming, and I'll exit with minimal damage versus being at the line getting blown out for 10 grand in one day. So why fight it right here?
Do you
can
leave
still
yourself, Nick, just Aaron, do you leave yourself open-ended on that 2075, or do you buy higher?
No, heck no. No, no, I do not. I do spreads, and if
Yeah.
I'm gutsy, I'll make the spread $10, maybe $25 wide on an NDX.
Yeah.
But I definitely, the key is there, Dennis, buffer. If you have a thesis, put a trade on, but make sure you stick to your parameters. 2075 sounds pretty high. It's not that high.
Can
If you
happen.
think it can happen, it has happened. I mean, look at the charts. It has happened. They're buying every dip and they're chasing. You said don't chase. I totally agree with you. Do not chase. And that's why I tweet these levels and I send these levels out to members because I want them to not chase when it's not appropriate. Sometimes you miss a few, but that's okay. But if you keep chasing as a habit, then you're going to lose more than miss more. So don't chase, that's for sure. Leave room for error. That is, that works across whether you're doing credit spreads or anything. You have to leave room for error or have a plan B, an escape hatch. You can't just put a trade on and expect that you're right, and there's no way you're going to be wrong.
And on the downside, are you selling those 1950 and 1960 puts or 19 and a quarter puts if you're going to use the same
You can definitely do that. I haven't done it this week yet, but you can definitely do that. I'm still building bearish positions and waiting to hedge. I have hedged a couple. I did sell naked puts in Priceline when it dropped and then bottom back when it recovered a little bit. That was like a couple
Oh
weeks.
yeah, let's talk about that price line there. What a dip that took. Were you leaning on that 1182, 1183 level because it took it out and then it took it out by $6 and then rallied back?
When it was 12:25 on Thursday last week or thereabouts, I sent out a message to my members that I'm buying a lotto for the next day at 1200 put for Priceline, and guess where it went? It went down to well below 1200. So the put that they bought for 55 cents turned out 12.50 the next day. So whoever bought it at 55 cents had the opportunity to sell it back at 12.50 the very
Wow.
next day. So that was a win. And why did I do it? Because I looked in the options and there was no plan B for whoever sold the $1,200 put. There was a $1,200 put, and the next put available was 11.50.
And you
So
did, and you
So they did. So they left themselves open-ended, basically.
right, I saw that and I was like, 55 cents. Yeah, I'll invest in that and see what happens to that poor seller. And they got killed. So
when did you cover that? I mean,
I covered it at around 3.5 ish. I can't remember. So I made a pretty penny. I'm upset that I missed $9. No, I still made a nice profit. I turned
Yeah.
55 cents into $3 or whatever it was. But whoever was, I'm not a gambler, so a gambler would stick to. I know Priceline can move $20 in 10 seconds. So I was like, okay, I'll cash it in and then see what happens. But I know there are some people that cash it in for 8 and 9, and I don't think anybody really caught the bottom. But if they did, kudos.
I'm taking a break and signing up for Nick's product on MarketFi, creating income with option spreads because that was a great. I mean, the great thing about that trade was your risk. 55 cents, right? Hey, you took a shot on it. I did do I remember I was looking at it last week. I did do that bearish article on it. I had no idea what kind of follow through it was going to get, what kickstarted again. And we always talk about finding a catalyst. And yeah, I wrote the article. That doesn't mean anything. Evercore comes out the next day, downgrades it, and that's what got it going. But so Nick, what was it, about 3 weeks ago? I emailed you and I said, help me get my CMG position on, and I'm still have done nothing. What do you think? I mean, we talk to you about this every week. Is this consolidation ever going to end?
Isn't that crazy? I mean, I was looking at it as like, boy, but you want to be bearish on it, but then you see the couple of times it did consolidate before, it just sprung up. So I'm afraid to short it here. I did get out with a short. When we started talking about it, I did kind of a very convoluted short position on it, which was free and very successful. But here, I think it's going to depend on the market in general. It's the momentum stocks have shown great strength, but they haven't held it. They go up one day big time and they get sold off hard. So somebody said they're buying the dips. I think it was you, Dennis, this morning, that they're shrugging things off and buying the dip is I think what you said. I agree, but they are also hitting the sell buttons at the drop of a hat. So there's no conviction. So buying the dip, it's no longer with an exclamation point, is with just a regular period. So they're just selling it off real quick. So I would be, if I was taking a lotto, I would take puts in CMG and wait it out. Give myself time. It's squeezing to becoming some sort of a rising wedge if you consider 6 months-ish, say end of March maybe. That big drop sets up some sort of a rising wedge going forward. So, which is 700 is the upper end of it. So let's say they buy it back. The next big day it has, I'm going to short it again.
Nick, got to get your thoughts here on Netflix today. It's got a price target boost here this morning out from RBC Capital. They are raising their price target up to $600 on Netflix. It's trading up $6 here in the pre-market, which is actually pushing it up, I believe, close to an all-time high. The all-time high, just to set a few. Well, it's right there. September 3rd, we got up to 40.8760. So we're only $2 away from that all-time high. What are your thoughts here? Do you think this thing's got a shot at 500?
Yeah, I wrote an article last week about it. First of all, that price will probably put it at a perfect upper end of a rising wedge, and those are usually bearish. But I said in my article that thing has plus or minus 100 points in it. Because if it breaks it, it's going to run like you wouldn't believe upwards, and if it breaks down, and the range is pretty tight. I mean, it's not like I'm saying things I was like, oh, well, anybody can say that. But if that range breaks, and it's a pretty $20 or so, so if it breaks upwards from I can't see the numbers from here, but somewhere around 495-ish, 490.95, it has a lot of room to run upwards. But if it ever comes back down to the 460, 75 or something, 460 I should say, 65, then it has more downside. but I'm not going to stand in front of it. No way.
I know we've talked on and off about Goldman Sachs, and I know it was back under 160 there. We were talking about it. It had a real good earnings, and they just did not give any love to it. And now you've creeped up to this 180 level, and it has just been hanging up here. Taking a look at the dailies, just weaving and bobbing above this. What do you think here? Is there any kind of? I mean, I think this thing's going to make a move out of here. What's your take on
It,
Goldman Sachs?
it's beautiful uptrend, isn't it? I mean, it's just I like the company. I mean, it's got the aura of money making. But here's the thing: pull up a 5 year,
Okay.
and you can draw a line across that level.
Oh yeah. Yep.
You know, I would need to see confirmation, but if it does break it, just like the Netflix, where's the limit upwards? But the only cloud that looms over all of this is that the markets are at all-time highs already. So, I mentioned the other day that if you pull up the Nasdaq 20-year, this is kind of like a ridiculous point here, but if you pull up a Nasdaq 20-year and if you draw a circle in the bubble of the bubble, look at where we are. We're about a month away from the peak in time. So at levels, there are hundreds of points away, but the previous time we got there was pretty steep. So if you take the slope into consideration and adjust it, we're not that far away from the bubble all-time high in the Nasdaq. So before, kind of like when Apple hit 100 and broke it, and everybody got excited and started buying the 110s. Take this event out. Nobody's excited about the 100 anymore. So I want to see how the markets, like the Nasdaq, behaves at the 100 equivalent here, which is the bubble. So if we ever get there, yes, Goldman Sachs looks bullish, but I want to see a peak over that level where it's been.
You want to see, because it's had a couple closes above there, so it's like you would rather buy it at 182, 183 than at 179 or 180. You're waiting for it to distance itself from that area.
I do, because that last peak it had, if you pull up a longer term chart, it did go above that level, but
Not for
it
long.
didn't last. So it wasn't too convincing. And this last candle was a doji, so ish in spirit, they want to sell it as a wide candle, and then it ended up closing somewhere in the middle, and it's indecision all the way across, but it is a beautiful trend, and I want to participate, but also is looking like a rising wedge right now. So I want to see a confirmation, and if I were to make a bet here, I'd take puts, or a put spread to hedge it.
Okay.
Just as a fun, or even a put fly,
All
where you
right.
say buy a put, sell two, and then buy one behind it.
All right, let's finish up with the rest of the momos here. Twitter has come all the way back here, back firmly over $50. It actually the level we'd been talking about for a while yesterday. 52.50 was the high in the pre-market day on earnings. Got to 52.68 yesterday. Closed lower at 52 even here. Do you see any signs of Twitter giving up on this rally, especially since they are trying out the buy button yesterday?
Last time we talked on Twitter, I said it's one of those things where you have to buy it, a leap, or buy the stock and forget
Correct.
about it, because somebody will figure it out. And I think they are starting to figure it out. I'm a Twitter user. Now I'm getting hammered with windows that pop up in my Twitter, not intrusively, just, pay for exposure. Many ways they're trying to bring money into their pockets. These people are trying to figure it out. Twitter is, I would buy an in the money call and sleep on it, leap, or buy the stock and sleep on it, because somebody will figure it out. The only danger there is if the market's in general correct.
Yeah, and it's been on an extended run here, so maybe is it too extended? Would you wait more for a pullback, or do you think this is one that you don't mind chasing?
Well, it is at the upper end of it, but you got to make the call. And when I made that, it was still in the 40s. When I said that, it was still in the
when
40s.
you were-
I didn't do it. I set up the trade and I saved it in my in my bucket of things to do, but I never got around to doing it. And the good thing, if you do buy a call, you can put it to work and sell calls against it in the short term to lower your entry cost with time. So
Okay. All right. We've had Nic Chahine on, as always, on Tuesday morning, talking about the high flyers. He's the MarketFi maven and author of Create Income with Option Spreads. I encourage all you listeners to check that out. Nic, thanks a lot, and maybe we can get away from this 2,000 level today. We'll talk to you next week.
Always a pleasure.
Okay. 8